You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which many of you are feasting your ears right now. We love all you on-demand listeners. Remember, if you like what you hear on pretty much whatever platform you're listening on, keep rating and reviewing. It does help all the new folks discover. If you have a question, don't submit it via the review stuff because we don't check those very frequently. So if you have a more timely question, hit us up via the usual outlets at options. Questions at theoptionsinsider.com. All of those should work. Smoke signals, carrier pigeons, they all get to us eventually. And of course, if you want to go above and beyond, join us live. Join us for Options Oddities later today, the other exclusive shows, all the other fun. Theoptionsinsider.com/pro is the place to go. And our buddy, Mr. Tom Jark from MIAX, had to go today right before showtime. He was scheduled to join us, and then a number of things came up with him, as it always does over there in the land of MIAX. So no hot seat today, but we do have the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of the volatility mecca known as Maine. Mr. Rock Lobster, welcome back to the program. How go things in the... For a while there, it was the northern volatility mecca of Maine, sir.
It was, and then I believe somebody usurped our whole kit and caboodle there.
Yeah, I forgot. Was it Texas? Who stole your thunder up there?
I think once Matt moved to New Hampshire, it kind of screwed everything up.
Yes, my New Hampshire. Yes, but for a while there, listeners, if you don't recall, it was a few years back now. But Maine was the number one source for option searches, according to Google Trends. Maine was the mecca. Maine was the hot spot. And it was pretty much 90% of it due to the Rock Lobster typing things like options and VIX into his search keyboard all day long. Yes, he can do search out there in the hinterlands of Maine as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. I usually let that stinger run a little bit longer than usual because I know a lot of you like it. It's one of your favorite stingers. So I let it play. You know, YouTube licensing be damned. As we keep on rolling into the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity and all sorts of fun perspectives. And coming into showtime, we're seeing a bit of a repeat of some recent sessions where we're kicking off the day kind of mixed, the market kind of struggling to find its footing, figure out what it wants to be today. The Dow's saying, I want to be firmly in the red today, off nearly 0.5%. But the S&P saying, I think I might be a little bit in the green, up a little bit north of 0.15%. And then the NASDAQ saying, the heck with both of you. I want to be firmly in the green, up 0.7%. So again, it kind of depends where you're hanging your hat, what kind of day you're having out there. Do you have a smile? Do you have a frown? Do you have a frown turned upside down? I clearly crack myself up here. As we keep on rolling into the world of vol, that means most of the major vol products are actually up from where they were on last week's show. Coming into showtime, we had spikes at about exactly an 18. That puts it up about 0.75 of a point from where it was this time last week. VIX Cash coming into showtime was at about a 17.5. That puts it up a little over a point, about 1.05 points to be precise from this time last week. We're pretty much exactly a point from this time last week. VVIX also up to about 113. It's up about 3 points from where it was this time last week. VSpike, which you guys can find. It's still kind of propagating out there. I'm having a hard time finding on all the platforms. I'm sure you guys are as well. But it's VSpike, VSPKE. Is the symbol for if you want to see the vol of spikes, not just the vol of VIX out there these days, but it is hovering around a similar level to the old VVIX, what we call colloquially here on the show, the old Viking, Mr. Rock Lobster, sir. It's another one of those weeks where markets kind of struggling to find their footing. As a result, vol not getting weaker, but actually getting firmer out there. What's your take on all this madness, sir?
Well, so apparently the Austrians are going full, I hate to invoke it, but let's just say they're going full totalitarianism on us.
It's funny because
they're mandating everybody gets the vaccine.
It's funny because I've been holding off on my in-person meetings and lunches, and a guy came in from New York recently, and he was bugging me. He said, come on, let's go have lunch. I said, okay. So he went and had lunch, and guess where he just came back from before I met with him? If you said Austria, you were winner chicken dinner. And I was laughing. I was laughing with him. This was about a week and a half ago. And I was like, oh, Austria. Interesting. We were talking about Austria. I had no idea that in the ensuing week and a half, Austria would become ground zero for the contagion, sir. But have at it. I digress.
So this is the whole COVID thing, which I find, let's just say odd, right? So you've got all of Scandinavia basically have totally no restrictions anymore. Take your poke, go along your way. Austria is telling everybody has to get the vaccine, and nobody can leave their house for I don't know how long. So why would they make everybody get it compulsory, and now nobody can leave their house? So you get the vaccine, like for what purpose? Anyway, I shake my head and I wonder. I think one of the questions is if Germany follows. So I think that was part of a little rally in bonds today, because also the spending bill, I believe, was not as big as people had feared, although it's still pretty freaking big, considering they still have to find the money. So it's only going to add $300 billion to the deficit. Who even knows about that number? But I've never seen anything come out of Washington that costs less. I've never seen that. If you can find something, you let me know. But I've never actually seen a less thing come out of Washington. So we've got that. And so I think those two things, and we're waiting for a new Fed chairman. That's another thing. So This 4,700 level is very sticky right now. We have, and then lastly, we have what I can only describe as an insane bid for the Qs, right? Amazon. Now that Europe could go full tilt again, possibly. But it's not EU-wide. So Nvidia is up another $12. The post-earnings rally for Nvidia. Microsoft up another $2. What else I see? Google is up. And of course, all of the stocks that provide some sort of COVID relief are up today as well. So I would say, Apple's up more. So Apple was up $4 yesterday, and I think up another $1 today. Mark actually traded a pin trade for 160, and it's right there for today. Apple's up $6 in 2 days on the fact that they're going to try to deliver an autonomous vehicle in 2025. I just think also, Vol, there's still a bit, for whatever reason, if Vol's not coming down, there aren't enough sellers. That's the simple answer. And it's keeping VIX pretty perky. It's kept the term structure pretty perky. There's a lot of juice in it. We crossed 18, so we almost got out of zone 2 today. Actually, we did. We did get into zone 3. So zone 2 is 13 to 17, and then I think 18 to 23. I think is the third quartile. So we touched it. We stayed there for a few seconds, looked around, and left. So like a crazy bid for the marquee names in the Qs. The valuations just keep going up and up and up. Nvidia is, what was the revenue number? Listen, and by the way, Nvidia makes great stuff. It's a great company, very well managed. It's awesome in every way. But I was just, the thing that was I was a little floored. So revenue, they're saying trailing 12-month revenue in Nvidia now is $24 billion. And the company is wildly profitable. Don't get me wrong. However, the market cap is now $800 billion. So, and yes, and maybe nobody goes outside anymore and just lives in Facebook and they buy a lot of chips and all that, and all that stuff, and it's totally. But I think just the frothy level is, a lot of people, I guess, they're buying puts. Usually, vol goes up when the market goes up. There's put buyers, call buyers, whatever. But there's more buying of options. So, the vol products have been just a miserable trade for the last 3 weeks, 4 weeks. They're not doing anything. If you're a seller of premium in them, you love them because they have just done nothing. But as the Qs have just marched straight up, the S&P 500 hasn't really gone over 4,700. So again, from just like a straight vol point of view, it's, volatility has been fluctuating. Now, interesting vol points. 9-day volatility was as low as 1190 a couple days ago. And today it is 1287. It was as high as 14 this morning, I think. So there's sporadic bid for vol, COVID uncertainty, new Fed chairman, spending bill maybe not so crazy as everybody thought it was going to be, which is kind of, I think, slight vol negative, pushing vol down. But it's just a mixed bag going into the holidays for all this stuff. And that's where we find ourselves, I think. So I realize vol and SPX is 8% or something. It's not very high. And when was the last time we had a 1% sell-off or a 1% move close to close in the SPX? I mean, if you look at here's the move in November. We have had almost 10% move since October 13th in SPX. So we went from 40, the low was 43.26 to 47.06. So it's almost a full 400 points, like 8% move in the last month. Again, driven by the Qs, and the Q stocks is pushing everything up. So at some point it will slow down, I guess, but maybe not. Who knows? So I'm not a fader of the market at all. But so as long as this momentum is going, but it's just let's just say my vol trades are smaller. That's all I'm going to say. They're smaller just because we don't do anything. And if the market does move, they'll make money. But like all that great decay edge you see, unless you've been kind of selling options short term or something like that, it's been a heck to collect.
Yeah, you mentioned Apple, Vol. We got a listener chiming in here saying he wants Apple to stay right where it is. He has a 160 fly on in Apple right now. And if that's your short strike, you're a happy camper. Apple's hanging out at 160 right now. So, yeah, he's looking pretty good. So, yes, we'll try not to move Apple for you during the course. No promises, but during the course of the show. We will do our best to keep Apple right here. Mr. Rocklopsy, you kind of touched on this just now, but it's a question we're getting a lot these days that you can understand probably why, given where we are in the markets right now. A lot of other external factors at play. Maybe we should see vol coming in. Realized vol, historical vol, both pretty anemic. And yet, as you pointed out, we continue to remain firm, if not creep up. You kind of only have jokingly said that there's not enough sellers out there. At the end of the day, that is the ultimate answer, right? But to your estimation, why do you think there are so few sellers right now? Is it the Fed spookage, to coin a phrase? Is it, this overall valuation level? Is it the inflation fears? Is it a combo of all of the above? Is it pandemic-related lockdown concerns? What do you think is keeping people from hitting the exit button on vol right now?
Well, I think a couple things. Well, just also the size of the stocks that are now kind of pushing around the S&P 500, right? Tesla's a big part now. Apple, all of the NVIDIA, right? All of these stocks, I believe NVIDIA is in the S&P 500. Facebook up $10. So you're getting kind of this upside blowout a little bit in these stocks. And if you're performing any kind of, broad market hedge, right, that goes into the SPX. So it's hard for that vol to go down when these stocks just keep going parabolic. It was very reminiscent of 98, 99, 2000, where people just had to have these stocks and there was no end of buying. And as well as I do how high they can go, really high. But you're going to have a rally. You can have a rally for a while, and VIX just never sees below 16. It just doesn't get that low. You will find. I find that the bargains basically are in the weeklies. You can get a lot of single-digit vol 1 week out. We do have a holiday, Thanksgiving coming up, so they discount it a little bit. But you get low single-digit vol, and I think the bargain is in the weekly stuff. I think the 30-day stuff is just way too expensive. But a lot of cheap calendars and stuff like that to trade in the weeklies. As my students remind me, say stay away from those damn VXX puts and go get yourself some SPY calendars. And they have been doing well. Probably my best trades of the last 3 or 4 weeks. So you're used to seeing stuff. The edge keeps flashing, and like Pavlov's dog, I do it, and I'm struggling to break even on the trades, which historically have been very good to me. So I'm just doing less. My answer is to do less. The edge is still the same. And maybe, just maybe, we will have a 1%. But all I need is 1% move in the SPX to make some money on these things. So it's not asking a lot, but dang, just not getting them. We're not getting them. So what are you going to do? But I do think all of this stuff is connected, and the more, and Tesla just had it dropped from 1,200 to 900, I believe, and is now back to 1,100. So, these stocks are moving and the upside is moving. So I think that's that's just a big part of it. Yeah, it traded 1,000, traded as high as 1,250, had a quick run down to 1,000, and then Mr. Musk, I guess, is done selling for right now. So on Tesla goes. You look at that stock, it's so amazing. But I forget that it was $100 last year, split adjusted. So if you go back 1 year, right? So 1 year, the low was 492, right? But if you go back, this was in November of 2020. But if you just go to the start of 2020, the start of 2020, so we're talking let's say January 2020. It was 147 bucks. So stocks had a tenfold rally almost in 2 years. It's enormous. So I think this is the stuff that keeps VIX from going down. The sellers are in the short term stuff because there's not the reality is the market's not moving. So the short term stuff is cheaper. People are selling that, but they're just not selling the long term stuff.
Yeah, we had an interesting discussion on the show last week. Bloomberg had a piece last week quoting Susquehanna. Susquehanna is all over the retail skew now, and they were kind of blaming the retail one-lot traders for bidding up the upside call skew, which they certainly are. And as we continue to rally into the upside call skew, we're actually seeing vol get firmer, and they're pointing towards the upside calls more as opposed to what would traditionally be probably the downside puts bidding up VIX in an environment like this. It's actually the upside calls remaining firm and actually getting firmer that keeps and seems to be supporting VIX. Speaking of skew, it's interesting. I can't recall the last time I saw this, Mr. Rock Lobster. We don't talk in glowing terms about the skew index for many reasons. You know, it's a close-to-close index. It's only one kind of obtuse number. But I don't think I've seen this before, Mr. Rock Lobster. Last week on the show, the skew index was 144.73. Don't look at the outline. Take a guess, Mr. Rock Lobster, where the skew index is on today's show.
Oh, on today's show, God, I haven't looked at my skew chart this morning. I haven't.
I'll save you the effort. It is almost.
I guess it's on the high end.
It is almost literally unched. It was 140. It's pretty much 144.80 last week and 144.80 this week again. It literally unched on the week. What say you, sir? It's insane to me.
Oh, the skew index?
Yes.
You know what though? But you have to think about, is that the SIBO one, right?
That's the only one I'm currently aware of. Yes.
Oh, well, there's all these indexes around, like there's vol index. But what I'm saying is because there's a call versus put in the SIBO skew index. So, if the puts come in a little bit, the calls lift a little bit, but nothing's moving. But that's why the trading the vol sucks, right? Nothing's moving. I mean, if the skew index was moving around a little bit, there would be some jazz. This is the classic, what I call vol fatigue, right? The 30-day vol fatigue, where you have a lot of premium in the future curve because the front end of the curve is the vol so low on all those individual options. So and that makes with a forward vol curve, the lower the front month vol is, the higher the forward vol, which makes the futures kind of pump up to a higher level. The VIX futures, that is. So it doesn't surprise me nothing's going on because everything is very stuck right there. So the lower this short-term vol goes through the holiday, kind of the futures, when it starts looking at all that vol as the term structure moves backwards, you're going to see higher vol back there, or higher forward vol as the front keeps diving down. So it doesn't surprise me that the skew index isn't moving because, all that stuff is just locked there and not moving. The market, like you said, without 1% moves in the market, it's just not moving. So I would say, yes, that does not surprise me. I would have guessed it's on the high end, though, at the higher end of the index, though, overall.
I can't recall over the span of an entire week it not moving almost literally a tick. I mean, it's pretty much the same. I thought the data was broken for a second. I had to go back and make sure it was correct, and it is indeed correct. So yes, it moved a whopping 0.07 over the course of the past week. Again, read into that many things. You have two moving parts here. You have the call wing and the put wing, but still fascinating to see skew index just kind of glued to where it is over the course of the past week. Let's see if the futures are doing something similar, if they're glued or if they're seeing a lot of evolution out there. Of course, the no future rolling off the board this week. And we've got Dees moving up to the front spot now, the catbird seats there, and Jan taking up slot number 2. The Dees future ticking up on the week, so that front portion of the curve, again, getting a little bit juicier. Going back to our comment at the top of the show, people aren't selling vol. We're seeing that in the VIX futures as well. Dees future up nearly half a point, about 0.4 of a point, and the Jan future ticking up about 0.75 of a point over the course of the past week. Mr. Rock Lobster, anything catching your eye in the world of the volatility futures term structure this week, sir?
Well, yeah, that's kind of what I was, I guess I was trying to allude to anyway, because as vol gets lower in SPX in the near terms, right? The front end of the curve, front end of the volatility in SPX kicks down, and then the back end, the forward vol, which the futures are kind of forward vol on the SPX, right? Because that has to work out. It gets higher. So what it's persistent is even when VIX was lifting today, like that the futures were staying like above cash. That future premium was staying, right? So basically the whole term, everything was just lifting together. Like, it lifted this morning. And then it kept lifting, right? So that's what I would say is the thing that I'm looking at is you're not like, I think a little bit where the futures kind of absorb the cash move because you have a harder bend in the front. Like all the volatilities in the SPX in the early terms start to kink up, and that will flatten the curve out. And it's not happening because everything's just moving up in lockstep, meaning the market's still not buying that we're going to be moving a lot in the short term. And I think that's what the curve, to me, says. It's just not buying it yet. So for whatever reason, you can't fool, nope, there's not going to be a dip. No dip. No dip today. We don't care what those pesky, and I think the Germans just announced they're going to lock their whole vaccinated population down. Like, why people take these vaccines and then can't leave their house? I'm shaking my head over that one, but I'm sure we'll see what somebody else could come up with here in the Western Hemisphere. I think that's what's going on term structure-wise. So until you see that curve actually flatten, listeners, I would say we're probably going up and not going anywhere. And that's why I think like the calendar type trades in the short term, they work pretty good. You can actually short-term protection is relatively cheap. Like, so just as an example, right? If you're looking at SPY right now, you can buy a note. So this is after the holiday, and granted it's after the holiday, but the 466 put in SPY, and there is Thanksgiving, there's only 4 trading days, is only $1.46. Okay, that's $3 out of the money. It's only $1.46. You can buy like a 468, 463 put spread for $1 in the SPY. Like, right, it's almost at the money. So the vol is really low on the front. Like there is not what I would say any fear premium there. So the 470 straddle is just under $5 for next Friday. So it's so inexpensive. But maybe people think they're like, that's what I'm saying. As far as term structure goes, there's not any fear. The sellers of options are in the short term. They're not in the 30, 60-day area for whatever reason. So that's the market that we have. But that makes VIX not go anywhere, and it makes the skew index not go anywhere because there's no action on it. And it's but Tesla's exciting, and NVIDIA is exciting, and Apple can be hard to believe, but Apple is exciting. But the vol complex, not exciting. Not exciting at all. And I'm looking at it right now. Yeah, skew is like in the dead middle of the range, basically. It's like nobody cares. So And that's what we have. I'm not trying to gloom and doom all the vol traders, but by the way, I'd be happy if it moved. It would be great for me. But as of right now, I don't see it happening. It feels already priced in and just not a lot going on.
You know, where there is stuff going on, and we don't talk about it a lot here on the show, but it has been creeping into the conversation more and more, is Treasury vol. You know, people like the MOVE index out there. It's not one we talk about a lot here on the show. You guys are obviously all familiar with VIX, the MOVE index. I take a lot of these proprietary VIX flavors with a grain of salt. This Merrill's, one of these, Bank of America, proprietary index on 1 month Treasury options. They weigh it across the 2, 5, 10, and 30-year contracts. So trying to get a snapshot of vol across the Treasury curve. A lot of people have been pointing out of late that this one's kind of been trending in the opposite direction to VIX of late. Obviously, net over the past few months, outside of the last few weeks, VIX has mostly been trending down, and we've seen this one diverging in the opposite way. In fact, coming into Showtime today, we've seen the move in the 70s, which is insane. Is this an index you pay a lot of attention to, Mr. Meatball, the MOVE index? And I know your compatriot over there, Mr. Meatball, he likes to watch, like, you know, the VIX of TLT, which is another way to do this, by the way. What are your thoughts on just the creeping, lingering fear that's making its way into the bond vol these days, sir?
You know what Sebastian said to me today? He's like, dude, can you do vol views today because I'm going to Chicago? He's like, and he always calls me Mr. Lobster anyway. And I said, you know what's funny, Mark? He calls me Mr. Meatball too. If he didn't own the conglomerate, they would fire him for getting it wrong all the time. I swear, if he wasn't the major domo, they would.
If it makes you feel better, I always call him the Lobster. I always call you the Meatball. I do not know why. It's just the way my brain works. It seems like these days. So you're both equally misconstrued.
We said it was anti-Italian bias. We all sound the same. But again, I think that's coming from another Italian, so we can't.
Then I would hate myself. I would hate myself deeply.
Exactly.
I am 100% genetically certified Italian. There's naught else in my blood, sir. So I would be deeply hateful of myself if that were the case.
You are all spaghetti. We have looked at, so we have a new fixed income guy who's been doing really well with us, Bill Griffo, and I'll try to get him on your show for the Vol View show. He's really good with the bond, vol, and commodities. So yeah, he has been noticing it's super high. We've also noticed a lot of put buying in HYG. Again, like a lot of volume. Everybody's waiting for that shoe to drop, but it hasn't happened. By the way, it's not happening. So yes, we noticed the vol being higher, and yes, TLT is marching back up to a recent high, but it's not necessarily material. Like implied volatility in TLT is in the mid-teens, right? Which not long ago you would be what, the mid-teens? It's averaged the mid-teens for the last a year. So it's really hard to believe that that's where bond volatility is, right? That's kind of nutty. It used to be like a single-digit thing forever. So, and right now it seems like we're climbing. TLT is climbing back out. The vol's coming in a little bit. Again, you got like the Fed chairman not quite knowing. Apparently, we are cutting the bond buying. So, it's just like with VIX. The recipe is there for the market falling. The buyers are out there. Vol's higher in bonds because everybody's like, 2%, we're going to break through, and it's all going to be awful. Like all that rhetoric is there, but it doesn't happen, right? And I think the same thing that's happening in bond vol is happening in equity vol. Like anything can happen at any time. It just hasn't materialized yet. So yes, we have noticed that those numbers were quite high. I think they're at a huge. The divergence is very high relative to VIX. I guess the move is very expensive. So all kind of oddball stuff.
Very oddball stuff. Let's get out to some more oddball stuff. In particular, the volatility products you folks like to sling out here. Let's get out to spikes first. We had mostly, I think it was a 6-way, pretty much, 2 3-ways that were dominating the tape out there in November. And spikes, obviously, those all rolled off the board recently. But we got some new paper taking over the top spot here. Mr. Rock Lobster, tell me your thoughts on this one. I'd be intrigued. Once again, it is someone fading vol to the downside with spikes options. This went up yesterday on spikes. Another 3-way. So people like their 3-ways out there. It was, looks like paper bought 1,600 of the Dees 21 puts in spikes. They paid $303. So again, these are somewhat in the money, kind of meaty as a result. So they paid $303 for those. And then they sold the Dees 24-30 call spread. And they pretty much sold that for about 60 cents, 58 cents. They sold it for $1.74 and $1.16. Respectively there. So they use that vertical to finance, but I use finance pretty much loosely in this case. They only really got about 60 cents for a 6-point wide vertical. That's a pretty wide vertical. So now what you have effectively is they paid, $2.40 for this put rather than $3. So, I mean, I get it. You're doing 1,600 of them. So you're shaving off close to $100,000 worth of premium with that, about $96,000. But on the flip side, you're adding 6 points, aka about $1 million worth of additional risk to this trade. I think I called you the meatball again. I apologize. Mr. Rock Lobster, what are your thoughts of financing a pretty meaty put with a 6-point wide vertical and then not really getting a heck of a lot of juice to do it, sir?
That actually is such a packed a question for me.
Are you saying it's potentially a leading question? Am I pointing you in a certain direction? I would never do that.
I think so. So you're so you have a call spread, and then you have somebody. I'm just looking at the price there. Geez, tell me why. What I'm looking at, this is the Thursday trade, right? What I'm looking at is why is the the 21 puts are $3. You have to say you're feeling that's a little it's feeling a little bullish, that trade. I have to say, I'm looking at how the prices are. It looks like it's kind of collar action, to be honest. They're actually selling the 24-30 and buying the 21 puts, I think. So it's actually kind of bearish feeling.
Yeah, they're buying the puts. They're definitely buying those puts. Yeah. They could have spikes against it. They could be collaring. I just don't know the 6-point wide spread. I don't know. That one doesn't float my boat as much. You're adding a lot. You're not getting a lot for that 6 points you're adding on, is what I'm saying, sir.
That's the problem with selling call spreads in spikes or any of the vol products, right? You're not, they never pay you well for that trade. I think it probably works better if you sell like the strangle and then buy the protective call, and then just kind of, manage the delta sort of in between, like trading futures around it or trading VXX around it or something like that. If you have portfolio margin in your account to do it. I think that's probably the easier way when we're kind of in a stuck situation. So yeah, you're getting 60 cents against your put. Just my thought with always in that position is just buy the put. And if it works, great. And if vol really spikes really high, then go sell your call spreads, putting it all on at one time. I don't see you have I don't see how you ever have, so the trade let's put it this way. Once you put the risk collar on like this, the trade never gets better for you, right? Meaning you're in. It's like a risk reversal, right? Like that's why I usually either lead with selling the put or buying the call, because there's always a chance you could make that trade for a better price. The hard part always is, of course, we're all greedy pigs, and you look at the risk reversal and you're like, this is a lot, man. I'm going to make a ton on this. Or the collar, like, I'm fading the crap out of this and it's going to be great. and then you get the whoopsie, oh, I'm wrong. So it's not my favorite way to do it. It's like teaching my students when they buy call spreads and VIX, and then they want to sell the VIX puts against it. And I go, listen, that idea is fine. You think vol's going up? I totally get it. I go, but you don't ever have to sell that VIX put until the very last minute, because usually there's so much contango value in it, you don't really get a lot. And if you're going to buy a call spread, you can always sell those puts whenever you want to. So the secret really for trading VIX like that is, if you think vol's going up, buying a call spread is fine. But you're almost always buying contango, and it's almost always going to suck. So what you really need to do is wait till there's a real downtick before you sell. Sell puts if you're trying to generate those dollars. That's what I'd say if you want to trade that from the long side like that. So again, this is not my favorite way to do it, I would say.
Yeah, it's just weird all around. If it's a collar, then why are you buying the 30s against it? If you already have the spikes, you don't need the 30s. Then you sell the 24s, and you're cutting your put more than in half. I get that. That makes sense. But just doing all that just for 60 cents, that makes me think they don't have the underlying. It's not a collar. It's just a vertical against the put, in which case I like it a lot less, because you're taking 6 big points worth of risk. We could easily be there. And for what, 60 cents off your put? That's hardly worth doing. You're still paying $2.50 for that thing. So you're right. Just buy the put and then let the dice fly a bit and see what you can do down the road. I don't like, the second leg of the watch. Whoever traded this, watch it be Simon or something. He'll write me up. Why are you slamming my trade? But either way, this one, just something about this trade just rubbed me the wrong way. Let's keep on rolling. Does it bother you? I get the intent behind it, but I'm not a big fan of the execution. What are your thoughts, listeners? Maybe you love this one. As we keep on rolling, let's go out to the big dog, which is VIX. Not that big today. 223,000 contracts on the tape. The ADV also ticking back down, starting to threaten the 400K level again in the wrong direction. It's at 403,000 right now. It's down 19,000 from this time last week. So not a big rock'em sock'em VIX week. Let's get out to the top 10 out here in VIX land. By the way, now swinging the other way, which is interesting. This is the first time in a while we've seen a preponderance of calls in the top 10. Usually we've been put biased most of the time, and once in a while it gets to 50-50. That's about the closest we've gotten. But this week, 60-40 calls over puts in the VIX. And that again reflects what's going on out there. We're seeing things remain firm, if not creep up. Again, read into that what you will. It's just the positioning of the top 10, but it is interesting, I think, to say the least. It cost you 102,000 contracts to break into the top 10 in VIX, which, as you know, is not much. A lot of OI has rolled off the board with expiration. That's another reason, could be why we're seeing such a weird setup in the top 10 right now. A lot of positions went away and have yet to be reestablished out there. D's 18 puts, number 10, 102,000 contracts. Number 9, 103,000 of the D's 25 calls. Number 8, $1.09 of the D's 35s. Number 7, 118,000 of the D's 20s. I'm very sad. My favorite position is now off the boards. The Nove 60s went the way of the dodo. I hope someone loaded up on those and was swinging for the fences. Number 6, $1.18 of the Jan 17 puts. Number 5, 134,000 of the Feb 65. So I think whoever was playing in the Nove 60s probably coming back to play in the Feb 65s. Number 4, $1.36 of the D's 40s. Number 3, 155,000 of the D's 30s. And then the top 2 are our final 2 puts in the top 10. $1.59 for number 2 of the D's 16 puts. And number 1 out there with a pretty small bullet, about a 22, I would say. 205,000 of the D's 17 puts. Let's get on out to the paper out there today. Again, not a ton of paper on the tape today. 223,000 contracts as of a few minutes ago. The most active contract today, the D's 15 puts. 35,000 of those on the tape, followed by number 2, 17,000 of the D's 24 calls. Number 3, 17,000 of the Jan 16 puts. Number 4, also 17,000 of the D's 18 puts. And rounding out the top 5, most active today, the D's 16 puts with about 12,000 contracts. Yesterday, a lighter day, only 388,000 contracts on the tape. The most active contract yesterday, 36,666 to be precise, of the D's 20s. Number 2, 29,000 of the D's 17 puts. Number 3, 20,000 of the Feb 27s. Number 4, 19,000 of the D's 16 puts. And rounding out the top 5 yesterday, 17,000 of the D's 60s. And maybe our old Nove 60 friend is back. We'll have to dig into those and see. Wednesday, 551,000, one of the more active days of the week. The most active contract on Wednesday, 42,000 of the D16 puts, followed by 30,000 of the Feb 27s. Once again, the Feb 27s pretty active. Number 3, 20K of the Ds expiring on the 1st. So these are the weeklies, 18 puts. Number 4, 18,000 of the D17 puts. And rounding out the top 5 on Monday, 16,500 of the Jan 16 puts. Going out to Tuesday, which was the most active day of the week, almost a million, not quite, 802,000. It's the closest we've been in a little while out there in VIX land. So a pretty active day, all things considered. The most active contract on Tuesday, 66,000 of the Feb 17 puts, followed by 57,000 for number 2 of the Feb 50s, 5-0s. Interesting. Number 3, 49,000, so pretty much a tick under 50,000 of the the Nov 16 puts. Number 4, 45,000 of the Nov 17 puts, and rounding out the top 5 on Tuesday, 34,000 of the Dees 15 puts. And Monday, kind of splitting the uprights, nothing, but not a very active day either. 366,000 contracts on the tape. The most active contract, 43,000 of the Nov 17 puts. Number 2, 30K of the Nov 18 puts. Number 3, 22,000 of the Nov 16 puts. Number 4, 22,000 of the Nov 18s. And number 5 on Monday, the Nov 20 calls, 22,000 of those bad boys as well. I almost said it again, Mr. Meatball, Mr. Rock Lobster. You think I would remember these because I created them, but I digress. Mr. Rock Lobster, any of this paper or any real paper catching your eye out there in a kind of weird week in VIX land, sir?
Well, let's see. What's the range of VIX? 17, 17, 17, 17. Oh, 17 to 18 today. Or 17 to 18 yesterday. The stuff I'm interested in, 18 puts, 17 puts, trying to get those at my favorite prices, under $1, under 50 cents. Cheap. So again, this is I think a symptom of the times we're in. You get the 18 put for $1 and the 32.5 call spread for $1. So, or $1, about $1.20. So not really expensive to play in VIX land for this next cycle, considering that we'll have a Fed chairman. I think there's a lot of assumption about Goldilocks sort of going in Goldilocks time to Santa Claus rally stuff. Maybe we have a new Fed chairman. We're supposed to hear that today, maybe. But like prices for vol, again, I think the premium is in the curve, right? Because the D's future, I think, is still hovering above 20. It was when I looked the last time. Let me see here as we speak. It's 2065, right? So, D's future is 2065. VIX, a little under 18. And the 9-day VIX is 13, and the 9-day VIX was just 11. So, the premium is in the curve already. It's juicy still. It's not as high as it's been this year, but it's still pretty high. So, yes, I am looking at puts. I'm not doing near as much as I normally would do. Although the last cycle wasn't terrible, as long as you basically had to sell every downtick in VIX when you had it. You had to dump whatever puts you had because that was your only opportunity, which is how this year has been. Because, we don't really go below 15. We barely go below 16. So, as far as that goes, I don't see that changing at all. So the thing that really is changing is it's one of the first cycles I can remember where I couldn't get any good dollars for a 20, 30 call spread. I can never get more than $1 for it in the no cycle. Maybe $1.20 or something like that. Normally, sometimes you can get $2-3 bucks at least on a quick pop. Not this time. So there's just that upside vol move is just not there. So it would not surprise me that there's more action in these lower priced puts. You see a lot of pretty fair put action there on all your the days of the week. You get 16 put action, 17 put action in December, and that's what I think people are looking for. There's never really easy money in VIX, but It just feels like there ain't none now.
There certainly is not. Let's keep on rolling. We talked about the lack of vol fade out there. Well, that's reflected in some of the products you folks love to use to fade vol out there. VXX coming into right now up about half a point from where it was this time last week. It was about a 20, a little bit shy of 20 and a half, and it's a little bit shy of 21 right now. So that puts it up about half a point. Doing decent paper today, 199,000 contracts on the tape right now. The ADV is only 201, so it's pretty much at its ADV already. It's down about 3,000 contracts from where the ADV was last week. Let's do a quick top 10 out here in VXX land. Looks like we are 60-40 puts to calls in VXX. They're number 10, 18,000 of the D's 30s. Number 9, 18,000 as well of the, these are all NOV going out today. When I say NOV, it's all expiring today. Listen, all the rest is NOV. Wow. NOV 20 half puts. Number 8, 19,600 of the NOV 30s. Not going to get there, I don't think. Number 7, 20,000 of the NOV 21s. Number 6, 22,000 of the NOV 22s. Number 5, also 22,000 of the NOV 19 puts. Number 4, 24,000 of the NOV 19 half puts. Number 3, 25,000 of the NOV 20 puts. Number 2, 25,000 as well of the NOV 18 puts. And rounding out the top positions out there, 27, almost 28,000 of the NOV 21 puts. The way we're trending, even those 21 puts may be in danger today. So we're seeing a whole bunch of 21, 18, 20, 19 half, 19. There's a lot of positions here. Pretty much the whole top 5 of the top 10 in VXX are looking like they're going to go the way of the dodo. Because, you know, most people are buying those puts. They're not really selling them, listeners. So that's a lot of OI. That's going to be a lot of broken hearts out there this week. Today, we're seeing a lot of paper. Surprise, surprise, on the NOV 21 puts, doing about 13,000 contracts, followed by the NOV 20 half puts, also very much in play, with about 13,000 as well. Those are kind of the two most active contracts out there today. Mr. Rock Lobster, anything catching your eye in VXX before we roll on out to UVXY and then do the most difficult part of the show, sir?
Yes. Again, more of the put action. Not a lot of call action. So I've been looking at like 20 and a half puts for next week, or I'm sorry, for December 3rd cycle. So those are the ones that are in that kind of sweet decay spot if we're going to get them. So it's a good way to leverage that put and maybe buy. You know, I like buying strangles in here in case you get that pop, which never really materializes, and then I'm just like to break even on my strangles lately. But that's where I have been focusing my one good eye on right around the 20 and a half and 20 level for December 3. It is a very decay heavy area.
It is. We'll focus 2 of our good eyes really quickly on UVXY. Same deal, up about half a point, threatening the 16 hand, about 1585 when we last racked it up here. The ADV is about $157 out there right now. And today we're seeing about 127,000 contracts on the tape. Let's do really quick. Let's do a top 5. By the way, we're looking right now. Let's see. It's 70-30 calls over puts in UVXY, which is interesting to say the least. Let's see. Let's do a top 5. Number 5, NOV 15 calls, 11,000 of those. Number 4, 11,000 as well of the NOV 13 puts. Number 3, 11,700 of the NOV 15 halves. Number 2, now we're getting to the fun stuff, 17,000 of the March 60s. And that's not crazy enough for you. Number 1 is 18,000, almost 17,900 of the Jan 75s. I love the crazy upside in UVXY. Today, the most active contracts really quickly. 11,000 of the NOV 16 calls and about 10,000 of the NOV 15 puts. We don't have time to hit on earnings vol. Suffice to say, head on over to theoptionsinsider.com. Click on the Options News and Articles tab, and you will be inundated with earnings volatility analysis, including the hot new earnings trade reports, which break down some cool new trading strategies and how they performed over the season. Really cool stuff. And again, you can't beat the price. It's all freaking free, courtesy of our friends over there in ORATS land. As we keep on rolling, it is time to go and get difficult and get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Really quickly, before we do our prognosticating for the week, Mr. Rock Lobster, our question of the week, we do have to pay this off. It is about to expire. It is going the way of the dodo. It's got about an hour or 2 left, but we're gonna We're going to reveal the answer now. We've asked you guys which of these 4 products you think is the most volatile. We said keep it simple, keep it easy. Let's go like straight 30-day at the money vol. No crazy nonsense out there. Give you 4 choices: Tesla, Bitcoin, Nat Gas, and VIX. Mr. Rock Lobster, if you have a guess, have at it. And then B, more importantly, what do you think our audience is voting for?
Oh, well, I think right now what is, did you say most vol? Is that realized vol or implied vol?
Like actual, like 30-day implied, yeah.
I'm going to guess, 30 implied. Oh, geez. Lately, I'm going to just guess, I'll guess Tesla, 30-day implied. And I think but I think our viewers will say Bitcoin.
Interesting. When we crunch the numbers, and they do evolve over the week, but not a ton. By the way, I'll reveal the listeners are voting for Tesla. 30 point. Actually, no, I take it back. Listeners are savvy. They're voting for Nat Gas by 32%, just barely edging out Tesla at 30.7%. Number 3 is Bitcoin, 21.3%. And bringing up the rear is VIX at 16%. And you might say, well, VVIX is, it's over 100, so that's got to be the answer, right? But when you go crunch, VVIX is a bit of a mixed bag, using it as your specific measure for the vol of vol, listeners. We said look at 30-day at-the-money vol. When you go crunch it from that perspective, look at the options on Bitcoin and everything else. Bitcoin, at the time we ran the poll on Monday, Bitcoin was trading about a 78%, so shy of 80, well shy of triple digits. Tesla was about a 62%, so not quite as volatile as you might think. Nat Gas, 96%. Nat Gas is pretty frothy. Nat Gas has been flirting with triple digits quite a bit, and if you've been listening to Twifo, watching the moves out there, you know what's going on out there. And then VIX, again, VIX is a bit of a moving target. It was around, though, when we priced out the actual, looking at 30 days down the curve, looking at the implied levels on VIX, you're talking about a 65 to a 70, depending on kind of where you were looking out there in those options. So, Mr. Rock Lobster, Nat Gas actually taking it. What are your thoughts, sir?
What's funny is in the back of my head, I'm like, I forgot. Nat Gas is moving around a little bit. But, you got the on-again, pipeline. I think you just have a lot of supply issues right now with Nat Gas. Like, nobody knows what the heck's going on. So, I'm surprised that the options are 100 balls. So, at the money right now, that's probably the highest, I would say. So, there you go. It's the fact that Nat Gas is volatile when we have so much of it in the ground here is it shouldn't be that way. But
hey, blame the troops massing on the Polish border with Belarus there for all that fun stuff over there. But I digress. Let's get out now. Where did you vote, listeners? Interesting. That's an interesting kind of a contentious poll this week. A fun one. Probably have some questions about that coming up. Let's get out really quickly now because we're coming up against it here. Let's get out to the most difficult part of the show, the crystal ball. And vol has done nothing but tick up while we were talking, listeners. We have spikes, was at an 18.5. It has given up a little bit now, down to 18.35. And let's see, I just had VIX up on my screen. Somehow I lost it. I think pulling up all those other numbers. There we go. And VIX is at about an 18. So they both have ticked up quite a bit. A half a point for VIX and a little more than that looks like for the old spikes. And you know what? The meatball in his redonkulousness, because he likes to fade his book, as he says, he kind of split the uprights. He's 18.18. Spikes is at an 18.35 and VIX is at an 18. So he's a little bit outside of our margin of bullseye victory, 0.1 on these things, but I'll give it to him. I'll give him a bullseye because he's kind of splitting the uprights between those two. So that means Mr. Rock Lobster, Dave was at a 15.15, our buddy Mr. Shortball. I was at a 15.85, so no joy for either of us. After my spectacular bullseye the week before, I couldn't repeat my victory. That's sad to me. So Mr. Rock Lobster, you have a bunch of listener guesses here all over the place. I don't have time to get to all of them. Looks like we had some, 18.30 there for some of these. So there are a couple 18 handles here. We'll get to all these, 15.75, 16. A lot of people were lower, so I don't see any 18 handles here. Listen, looks like no winner chicken dinner this week, listeners. A lot of good guesses. Keep them coming, though. We appreciate you all. Let's go out, Mr. Rock Lobster. That means you get to do a double segment right now. You get to give us your vol pick as well as where folks could reach out to you if they want to learn more, sir.
So I'm going to say VIX 1650, 1651, just to mess with your head. And go to OptionBid.com today. Go to my Vol Trade Club. It's awesome stuff. If you want to learn, and actually we have running a special Call 10-888-TRADE-01 because I'm going to redo VIX Made Easy and VXX Made Easy every week for the next 2 months, starting after Thanksgiving. So if you join VIX Edge, you'll actually get $500 worth of webinar stuff included in the whole package.
Dang, that's a deal, listeners. OptionPit.com is the place to go to learn more. Mr. Rock Lobster feeling the fade. By the way, listeners, no vol views next week. So I don't know if that changes your prognostication, Mr. Rock. We have to go out 2 weeks. Does that change it at all?
2 weeks, I would go maybe 16. Actually, no, it's not changing it. I'll keep it.
16.5 for 2 weeks. Okay, interesting. Man staying by his convictions. He has the courage of his convictions. So for 2 weeks, listeners, because obviously we're going to be off next Thursday for Thanksgiving, and I'm not a monster. I'm not going to make the hosts come in to work on Black Friday the day after. They're still digesting Thanksgiving. So we're going to take Thursday and Friday off next week. You guys get a break from us the end of next week, listeners. So this is a 2-week prognostication. You know, I've been mulling this over all show. I'm still not entirely convinced in my head, but we are seeing vol coming in. This will be coming off obviously after the holiday, so we could have a little bit of a rebound. I'm gonna buck the trend. I'm gonna say vol actually still lower than where it is right now, but not that much. 17.25. So remaining firm. So that's your vol market for 2 weeks from now, listeners. 16.51 and 17.25. If you're sending in your listener prognostications live after the fact, make sure you're thinking about it for 2 weeks from now. And of course, you know where to go to learn more about all things spikes. MyAxOptions.com/spikes is the place to go to learn more. We got to get the heck out of here, but I'll be back hopefully with the Rock Lobster in tow in a little less than an hour for all you folks in the secret club, breaking down all the crazy, weird, unusual, wild trades going on. How have our trades performed in crazy names like EDU and other crazy ones? Have you done any other weird ones? We'll let you know. All kinds of other fun stuff going afoot there in a little bit less than an hour for options oddities. Otherwise, if you're listening after the fact, that's going to do it for us for our broadcast week. We appreciate you joining us. No vol views next week. Still have option block and all the other goodness through the middle of the week, all the way through Wednesday, pretty much. You'll still have your usual shows. And then, of course, we're back again in 2 weeks for vol views. See you then.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.